Hey, it's Saul with the Stock Market Trading Watch List for Thursday, October 6th, 2011. Now, the big story this evening, Wednesday evening, is Steve Jobs has passed away. So Apple will likely be one of the more volatile stocks at the open on Thursday. Now, if it were to gap up, which I just don't think it's gonna. I think it's low odds that it gaps up. You have the 50-day moving average and some shorter-term moving averages coming down here. If it does gap down, or if it trades lower off the open, you have the 200-day moving average right here, which needs to be watched and respected. Okay, you can see it came just shy of it in the Tuesday turnaround. I think 70 cents shy. I mean, will it gap down 20-something points, 25 points, or 20, whatever it is, 23 points? Yeah, it absolutely could. I have no idea what it's going to do. I'm doing this at 9:06 p.m. on Wednesday. Maybe it doesn't gap down that big. I don't know. But the 200-day moving average is probably a good level to keep your eye on. I say it all the time, but I'll say it again. I don't use set levels as buy and sell points. I use them as areas to watch, to see if a pattern sets up, or to see if it holds as support or holds as resistance when tested. Okay, I like to go to a smaller time frame and see how the volume is, see how the rotation is down there. If it's support, see if the selling volume is drying up or being absorbed underneath with demand. Okay. So that's how I look at it. And the opposite is if it's, if something's going up, I want to see, is there supply above? Okay, so anyway, that's the deal. It will probably be a volatile open. There will probably be people trying to step in and defend. There's a lot of talk all over the internet now. I'm sure it's the biggest trending subject out there right now, and that's going to definitely put the focus on Apple in the morning. And there's other things also. There's the jobless claims at 8:30, and there's an ECB decision, I believe, 45 minutes before that. But I think the press conference is also at 8:30. These times are Eastern time. So it could be a wicked gap. And we'll see what happens. And like I said, I think Apple is definitely going to be gapping. So if you want to trade it, just remember that the increased volatility brings increased risk, not just an increased chance to make a killing. Okay, there's risk involved with that volatility. All right, so that's Apple. The S&P, the SPY video is up on the blog. Here's the cash SPX. A lot of lines all over this thing. But we never hit the 127% external retracement of this swing. We hit it on the SPY, but not the S&P. Came a few points shy. We got through the 10-day moving average, so the 20 EMA is next. We have to watch that to see if we can test up to that and break through it. I said it in the video, I believe the S&P video. I know I said it in the email list that I still don't believe that the bear market's over here. Okay, a couple of days up. I mean, we had it here. What happened then? We had here 3 days up. We had this beautiful run up. All right, so I think it's a little bit too early to call the low, and I think that if this is the low, okay, and I'm using the NDX, but it's obviously the same day on the S&P, the Dow, the Russell, then I think there has to be some backing and filling. Okay, I don't think we zoom it right up from here. But if we do, we do. Then we'll look to get on board. I don't think it's ready here to just jump on in the short side here. Okay, we had 2 days up. Let's pound the short side. No, I think it's too early for that, definitely, as well. I think the job numbers due out Friday, that's going to be the key to watch. I don't think making any big allotments or big commitments ahead of that is probably not the best decision to do that. So just to get that out of the way, okay? So let's look at the Russell 20 EMA resistance. Here's the SOX, okay? Nice day up 3%. And, if you look at the longer term, you squish it up, right? It looks more like, just a range being built here. Okay, some people even say, hey, this could be a left shoulder. If this is a head, maybe this forms another double right shoulder. I mean, I don't look for head and shoulders at lows. Okay, that's why I didn't see it in the S&P either. Up over here, a lot of people are calling this a head and shoulders. I really didn't see it there. Okay, here's the banks, also on a nice bounce. All right, on Tuesday, Wednesday, not as much. 20 EMA. Still a lot of problems there. Okay, still a lot of problems in Europe. Still a lot of problems in the banking sector here in the States. Okay, things just didn't go away on Tuesday because we had the reversal and the announcement out in Europe. Here's the broker dealer. Okay, bounce to the 10-day. The 20-day is above. Biotechs, 20 EMA above. Okay, cyclicals. Yeah, I mean, it's the same story across the indexes, okay? Look at gold. GLD had a pause day. Still looks like it's trying to make up its mind. Silver, the same kind of thing. Okay, here's oil. All right, on a bounce. USO, OIL. Okay. Let's look at some stocks. We looked at Apple already. Amazon. We got the continuation off of the hammer, but right into resistance here. So see what it does there. Price line. Well, didn't do much. I mean, had that beautiful hammer on Tuesday, but formed another hammer on Wednesday. Netflix still looking like a bear flag to me. Goldman. Okay, into the 10-day moving average right now. Can it get above it? We'll see. The 20 EMA has held pretty good for the last couple of months as resistance. Ford, somebody wanted me to look at Ford. Beautiful move here in 2 days. 50-day moving average resistance. See if it can get above it. Hasn't been above the 50-day since back in May. Okay, what else are we looking at today? Some of the ag stocks somebody wanted me to look at. Okay, potash on a 2-day bounce here so far. But you can see, I mean, even with the nice volume on Tuesday, look at the volume here on the downside. Okay, yeah, I mean, this was the biggest day except for maybe this one, but still, I mean, cumulative-wise, there's a lot of volume here on the downside, down here. So for now, it's a dead rat, right? Dead rat bounce, that's all. Here's Mosaic, and Monsanto. I mean, Monsanto actually looks really nice here. 50-day, I mean, short term. 50-day moving average right up here into the 67s. I mean, comparatively to potash, this is a really nice move here. But still, overall, a lot of congestion there. All right, so that's really it. I have a lot to say here. I think the overall market view is more important than individual stocks for now. So let's see where this bounce leads us. If it's going to fizzle out, like I said, we have the job numbers on Friday, and that could be a catalyst for a pushback down. Or maybe they're going to try to ramp it up. You got that 50-day moving average really coming down fast on the daily chart. So that could be resistance to watch as well if we do continue higher. All right, so it's a lot of wait and see for me. I wish I had a clearer picture here, but right now we still got to work off this little bounce here. So let's see, or this big bounce actually. But let's see where it leads before we start making firmer commitments, in my opinion. All right. Have a great trading day on Thursday. I'll talk to everybody again on Friday.